Candlestick patterns are reversal patterns and continuation patterns. In that reversal patterns, my favorite pattern, you exit your position, cut your loss and get out of it. This entire trend is now reversed to an uptrend. Are you willing to take that risk? Simply wait and watch the magic. That's a significant amount of returns within few months. We'll wait and watch whether the Bank of India does the price goes up or goes down from here on. Have a look at the
Market
Wipro.
is coming down.
And crashed.
Hello strikers, this is Nimisha and in today's video we are going to learn about chart patterns. In the previous videos we learned about candlestick patterns and a few theories about technical analysis. You can find all the links in the description below. Today as always we have Zubin with us and today we will learn about the chart patterns. So let's get started with the video.
All the very best. So, candlestick patterns are reversal patterns and continuation patterns. Similarly, chart patterns. So, what are chart patterns? So, a group of candlesticks clubbed together forms a particular shape. All right, so those shapes, I'll tell you what the shapes are. So, those shapes are called as chart patterns. Now, just like candlestick patterns, chart patterns are also of two types: reversal patterns, trend reversal patterns, and trend continuation patterns. We'll talk about reversal patterns first. And in that reversal patterns, my favorite pattern, all right, is called as, okay, it's a bullish pattern. I'll start with bullish pattern, and that pattern is called as double bottom. All right, it is a trend reversal pattern. So let me explain you the setup first, and then we'll also look at the real life examples, right? So the setup is very clear. It's a reversal pattern. So by the time you have already learned that the initial trend should be down. After a prolonged downtrend, what happens is it forms a W kind of pattern. Now in Dow theory, we have learned that the trend is down where the prices are making lower lows and lower tops. Now what happens is all of a sudden the price does not make a lower low. So this low is quite nearby to the previous low. It's not way lower or it may be even a higher low. So you got a two lows at a same levels or a little bit here and there. So now when this happens, you are alerted. Now you will call this low as bottom 1 and this low as bottom 2. Now between these two bottoms, there is this top over here. All right. What we will do is we will draw a horizontal line over here. This horizontal line is also called as a trend line. All right. So we'll draw a trend line over here. What we will do is we will wait for what? For prices to close above this trend line. Have you heard me clearly? Close above the trend line. We will wait for it. And once there is this close above this particular trend line, we will say that this downtrend is reversed and now from here an uptrend can begin. As an investor, you find this double bottom on a monthly or a weekly chart. Here you can invest. If you find the same pattern on a daily chart or on a intraday chart, you can simply buy the stock. Now, there are clear rules. Whenever you are buying after a breakout, you need to put a stop loss first. So, where risk management. So, the low of bottom 2, this level, if the price goes below this level, you exit your position, cut your loss and get out of it. And how will you set targets? So there are various ways you can set targets at the previous high levels. So overall, keep the thing in mind that this entire trend is now reversed to an uptrend.
Okay.
So that's a classic double
like,
bottom.
check this on the chart?
I'll
Where
show
to
you.
find the W?
I'll show you. I'll show you. All right. But do you understand this?
Yeah.
Sounds interesting? Okay, let me very quickly come to the chart now. All right. We have this chart, monthly chart of PNB in front of us. Now we can clearly see that currently the trend is down. Yeah, this trend is down, right? Now what is happening is this low is lower than the previous low. But now this is also a low. Is it lower than the previous one? It's
No,
around the same
around,
levels. So here you are alerted. Now once you, let me zoom this over here now. When you zoom this,
This is weekly chart.
yeah, this is a monthly chart.
Monthly, okay.
So when you look at this low over here and when you look at this low over here, between these two lows, there is this top. All right. So what we can do is there is a horizontal line. All right. We can draw a horizontal ray from this level over here. Yeah.
Okay.
And now wait for what? Wait for prices to close above this particular trend line. So this black trend line is a trend line. Now on this day over here, on this month, prices went from around 42 rupees to 52 rupees and closed here. Is it with above average increase in volumes? It's with huge volumes. So now over here at around 52, we can say that this downtrend can reverse to an uptrend. So here you buy around 52 rupees. Here you can buy, and where will you put a stop loss? Below the low of bottom 2. That is at 28. So just rounding it off, if you are buying something at around 50 and 30, so there is around 20-25 rupee risk. Are you willing to take that risk? Okay, accordingly, based on your risk appetite, your risk tolerance level, select the quantity of shares that you can afford to buy, all right, depending on your capital and your risk tolerance level. And then simply wait and watch the magic. Here you go. Your 52 rupee stock is trading at 121 rupees within a year. More than doubled. Yeah, good return on investment.
Correct.
Yeah, have a look at this. Beautiful. It went up, and in the same stock, in as we learned in our previous videos, a pattern called as a bearish harami pattern. Yes, absolutely. Here is a bearish harami pattern, and the price starts reacting from that point of time. This is double bottom pattern for you. Now we'll look at another chart, Crompton Greaves. Now we have selected monthly chart over here again, once again. So here once again the trend is negative, right? Prices have made a bottom over here, and have a look at this. On this particular candle over here, this big green color candle, the prices have closed above the high. We'll wait for this pattern over here. Okay, we'll take the closing. Now you can also convert this into a line chart, and whatever now when you look at the line chart, you will clearly see a W kind of a pattern. This is a modified W, no problem. Yeah. So here you have two bottoms, and within these two bottoms there is this top. All right. So you can draw a line over here and wait for a closing above this. So when I convert this into a candlestick chart, on this candle itself, the close is above this black line, trend line. So somewhere at around 317 or 320 rupees, you got a buy signal, and this breakout is with above average increase in volumes. So you immediately buy. The next month, the price rises up and it starts rising up once again. So from around 320 rupees, the price goes up to 480 rupees. That's a significant amount of returns within few months, right?
Yeah.
Now, just like this double bottom, do we have one more example? Can you spot a double bottom over here?
Here.
Yeah, you can mark it for your, you can mark it.
Is it this?
Yes, one, bottom one. Ah no, it's very close by. It's very close by. Let me. So this one bottom, you mark this as one bottom, and then prices goes up, goes up, and then comes down. You can mark this as a second bottom, and within these two bottoms, you draw a straight line over here. Prices gave a breakout over here, and it started a rally. It's not completed yet. It has retraced a little bit, and from here, when the price comes down based on Dow theory and price and volume action, the volumes are also down. So there is a high chance that when the market and the entire PSU bank, this is the Bank of India. So when the bank when the prices when the entire market and the sector starts performing, there is a high chance that this can start performing, and this downtrend can reverse to an uptrend over here. So this way you can mark a double bottom out here. So we'll see. We'll wait and watch whether the Bank of India does the price goes up or goes down from here on. Right?
Yeah.
Okay. So now let's look at the double top pattern. Double top is a bearish trend reversal pattern. What do we want over here?
The market to be in an
The first setup, yes, absolutely. The market trend is up, making higher highs and higher lows. All of a sudden, what happens is the price does not make a higher high, creating a M kind of a pattern. So we'll classify this as top, one, and this as top two. All right. And between these two tops, there is this bottom. We will draw a horizontal trend line. And now wait. Wait for what? Wait for prices to close below this particular trend line. And once this happens, you sell, expecting prices to convert to a downtrend.
So when we are looking to invest, we need to see the double bottom, and when we are looking to exit or sell, then we have to look at the double top.
Absolutely.
Okay.
Right? And these breakouts, right? These breakouts should appear with increase in volumes.
That should be kept in mind while
at
If
any
you're
point
a,
of time.
trading swing traders.
Even if you're a swing trader or an investor, whatever it is,
Mm.
whenever there is a breakout, the first confirmation, this is a price. So price is telling you something and that needs to be confirmed with volumes first. And then probably
Yeah.
other indicators if required. Let's look at the example very quickly. All right, we have Wipro. Let's look at Wipro weekly chart. Yeah. So what is the trend over here?
Bullish,
Bullish.
uptrend,
The trend is completely
going in an uptrend.
uptrend. Let me convert this into a line chart so you can see the M pattern
Yeah.
clearly. Yeah. So the trend is up. The trend is up. Now what is happening?
Here.
Yeah, you got a M pattern.
M.
Absolutely. So what do we get is this is a top one. This is top two. And between these two top, this is a bottom. So we draw a horizontal line at the bottom over here. And what is happening? The prices, has it closed below the bottom? Yes.
Yeah.
Yes. What's happening after that? Have a look at the
Market
Wipro.
is coming down.
And crashed. So if you have invested in Wipro and you know you invested somewhere over here, let's say around 270 rupees, your prices are trading at around 630 rupees. You have made a significant return on investment. And if you see a double top like this, don't wait for at least book partial profits. Now market generally whenever you are looking at a double top or a double bottom, market will give you one chance. What will happen is once there is a breakdown over here, market will try to retest and take resistance at the same trend line, and from there again it starts falling down. All right. In the previous examples also you saw that in Bank of India what has happened. Yeah, look at this. Here there was a double bottom over here. So prices did come up, came down a little bit, and then started moving out from there. Similarly, let's look at LTIM, Larsen and Toubro, Mindtree. Okay, the monthly chart, do we or on a daily chart? Yes. Can you find a double top? We have two double tops over here. Yes, absolutely, absolutely. Right. So here we have top one, top two. We have this bottom. It got crashed, and you saw a crash. Here you can also identify a double bottom.
Bottom. Yeah.
Prices broke and it started rallying. Now here there is a top one, top two, M pattern, crash. It's coming up. Now if it does not sustain this level and starts coming down, it can go down further.
Correct.
But if things improve and prices close above this over here, then this double top pattern is negated. Right? Let's look at Nestle.
Does it work all the time?
Most of the time. That's why I said at the beginning, this is my favorite pattern.
Okay.
All right. And as an investor, you simply sit back and relax. Wait for these patterns to appear and then act. All right. Let's look at Nestle. This is a current example which I am looking at. So Nestle over here, the prices are trading at somewhere around 2,200 rupees. You've seen one top here. Yeah. Another top over here. All right. And between this, there's a bottom which is broken. So now can Nestle go down from here? We'll have to wait and watch. But this is double top, right? And this breakout, has it happened with volumes? We need to check that. Yeah. It has happened with volumes. It has happened with volumes. Yep. So that's double top and double bottom. Any questions?
No, not yet.
All right. So in our next video, what we'll do is there is another kind of a reversal pattern which is called as a head and shoulders reversal. All right. So we'll talk about that in our next video.
Okay. Thank you so much, Zupin. And I think that we are done with the double bottom and the double top patterns. And as he said, in the next video, we'll be learning about head and shoulders pattern. So do not forget to stay tuned and subscribe to our channel.